Modern markets are easy to access for retail investors, but it hasn't always been this way. In this video, we're going to talk about how capital markets were created and how the evolution of the market has led us to where we are today. In the 1100s, the first brokers began trading government debts in Venice and France. In 1531, the Antwerp Bourse was the first exchange opened specifically for commodity trading. The first modern stock was traded in the year 1602 in Amsterdam. The company that held that honor was the Dutch East India Company, which was officially dissolved on December 31st of 1799. In the United States, the Department of Finance was created during the Articles of Confederation period in 1781 and reported public debt for the first time in 1783. In 1790, the first United States stock exchange was opened in Philadelphia at a coffee house located at a place known as the City Tavern today. It was called the Board of Brokers and later changed its name to the Philadelphia Stock Exchange. This opening was followed by the New York Stock Exchange, which first began in 1792 under a buttonwood tree in New York. The New York Stock Exchange was formally begun in 1817. The American Stock Exchange was formally founded in 1911. In 1917, the U.S. government began issuing Liberty bonds as a way to raise capital, and the federal government has held regular bond sales ever since. In 1971, the NASDAQ, which stands for National Association of Securities Dealers Automated Quotations, was created. In 1973, the Chicago Board Options Exchange, or CBOE, first opened its doors and options trading became standardized. The first online trade occurred in 1983, and by the late 1990s, online trading began to grow rapidly. The importance of online trading and the advancement of technology cannot be overstated. There has never been a time in history with markets that were more accessible than they are today. For decades, stock prices were quoted in fractions. 1/16 of $1 or 6.25 cents was the smallest amount that a stock could move. Since 2001, all U.S. markets have switched over to the decimal system, allowing for narrower spreads between bid and ask prices and creating a more liquid market. Markets have come a long way since their formation in the early days of meetings at coffee houses. More complex financial instruments are being traded, settlement times are shorter, and communication speeds are constantly accelerating. The days of the open outcry trading pit are mostly a relic of the past, and the markets of today are dominated by electronic trading. Markets are more complex than ever before, but thanks to advances in technology, markets are more accessible and more efficiently run than ever before.